Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning, guys. I think we all were glued to the screens, right? 6 o'clock onwards yesterday, and those exit poll results are quite interesting. We have the US president who seems to be indicating that suddenly he realizes that H-1B visas are important, immigrant workers are important. So there's a lot going on this morning.
Well, that's right. And I know both of you all would have spent more time in the northern part of India, but I think there's a bit of a nip in the air. You all will say Mumbai cold, yes. But
well,
it's getting a little bit cooler out here, which isn't so bad. But from a pure Bombay boy, for me, it's a little cool right now. I come on my motorbike, so you're beginning to feel like we're getting into the winters, Mumbai winters, yes.
Sweater up, Nigel. It's going to get colder, as Manisha told us, right? Yeah. There's this La Nina phenomenon. So apparently it's going to be a really cool winter, both here and, of course, in the northern part of the country as well. All right, well, I'll just quickly take you, lots to cover in terms of action, right? So let's start from the top. So the Bihar exit polls are number one. So they're showing that NDA is coming back to power with 148 seats. This is the average of all the polls which were conducted. Polling, the last phase ended yesterday. And of course, the voters are asked as they come out of the polling booths who they voted for. That's the exit poll for you. 148, total was 243 assembly seats. So, a little bit of within that 148 number, JDU, some polls are showing will emerge as the seat party with the largest number of seats. BJP at number 2. But point is that the alliance looks like is coming back. Markets will be relieved, but the actual results are on Friday, mind you. It's just, go back to 2020. I'm not saying same thing will happen. 2020 exit polls got it completely wrong. And of course, the famous exit polls of 2015. But of course, back then, Nitish had, gone over to the other side, and exit polls got it spectacularly wrong once again. So this may not be the same, and it doesn't have to repeat, but that is what exit polls are showing right now. But I'm just sort of placing that word of caution from the last two exit poll dissonance with the actual results in the state of Bihar that we've had. Okay, now US-India trade deal. Government sources say India is waiting for a response from the US government, and a fresh round of talks not needed at this stage, right? Now, this could mean a bunch of things, but looks like what we are saying is, and the government sources indicating is that something has been negotiated. We've presented our sort of side of the picture in terms of what we can offer, what we can do, and of course what we would like. Now, of course, it's up to the US side to take it forward or not. At the end of the day, in the US, I think it's going to be President Trump who's got to decide what to do, not to do. So, but incremental move forward. And of course, both this Bihar election and the India-US trade deal, at least the perception was that, one will follow the other. The Bihar election is over and results on Friday. So, will this also move forward? Markets will sort of wait for that. Now, there's an interview which US President Donald Trump has given to Fox News, and he was asked about the H-1B question. And he said, you need to bring in talented workers into this country. And, the interviewer pushed back saying, well, we've got enough talented workers here in the US. And President Trump said, well, no, you don't. Now, the context is important because this will excite IT stocks and if they, perhaps some will interpret this as a U-turn on H-1B. But the context is manufacturing jobs, right? And you just need to watch the full clip. Two things. One, manufacturing jobs. What we are concerned about with H-1B visas, of course, is services jobs, IT services jobs. But there you're talking about manufacturing jobs. The other point, if you just listen to the interview, there is also this bit about South Korea and South Korean workers. The US wants, the background is US wants to build nuclear power plants, nuclear reactors. And South Korea is, one of the countries top of the field in that area. And they want workers, South Korean workers, to do that. So I would say temper enthusiasm on the H1B question with regards to IT services, but we'll have to see what turn this takes. Now, US equities, just to kind of rewind the clock, finished mixed. S&P 0.2 higher, Nasdaq 0.2 lower. Tech stocks were down. Nvidia, CoreWeave was down big, by the way. Some delay on AI data center build out. Tech stocks generally kind of took a bit of a backseat on the back of these two names. Now, bond markets, cash bond markets were closed, but bond futures rallied post the ADP, the private payrolls numbers came through, and yields, bond futures fell about 4 to 5 basis points post the weaker ADP. That is essentially what happened, and I think it's showing up in Asia in a little bit. We'll talk about this. In terms of single stocks, there is FedEx, which jumped, it expects profits this quarter to improve from a year ago. Cisco will report later today, and I think we'll watch that as well. Just to tie in the levels, yesterday, of course, was a sharp, big recovery. Maybe the market got a bit of an inkling of what the exit polls will show, but it was a marked recovery. So the Nifty yesterday crossed the 40-hourly moving average. It held the 40-day exponential moving average, and it crossed the 20-day moving average. So a bunch of things happened. So the stop loss now has been moved up to the 40-day exponential moving average, which is 25,421. Targets are 25,800 and 26,100. So those are levels on your screen. Bank Nifty, near-term target is 58,300. The 20-day is now moved up to 57,742, which is the support. And then the low of 57,157 comes into play. GIFT Nifty will give you a quick sense of how we're likely to start. It's 160 points higher. This is the market saluting the exit poll numbers. And, of course, a little bit of enthusiasm around India, US as well. F&O positioning, stats, how are we setting up? Nigel is standing by. Nigel.
Well, there's a few factors working for the bulls. And if this gap up that we're seeing on the screen, if it doesn't sustain by the time we wind up, we'll actually be disappointed because the exit polls are predicting that the NDA is going to be coming in with a thumping majority in Bihar. That's good. Yesterday's close was above the 20-day MA on the Nifty, which is also good. And the global cues as well are positive. So, it appears the stars are aligning and hopefully the markets can get closer to around the 26,000 odd mark. The biggest trigger, though, will be the India-US trade deal. And once that comes about, you'll have the animal spirits back. And then, in fact, you could expect foreign flows. You could expect high amount of enthusiasm in our markets. So that's a bigger to track. But otherwise, you'll want to end closer to the higher end of the range for today's trading session. Yesterday, one positive was the FIs, they have been selling, last few trading sessions. Yesterday, the sell number was sub 1,000 crores, which is relatively low in comparison to what we saw in the previous trading sessions. What about index futures? They went ahead and they added close on 2,000 short contracts. The short positioning is at around 87%. And in absolute terms, they're closer on 1.6 lakh contracts on the short side from an FI perspective, while the clients are long with more than 1 lakh contracts on the long side. We should get that up for you. And normally that combination isn't so bad. Clients long, FIs net short. Moving to the options data then, the 25,700 call, well, that was fairly active in yesterday's trading session. The premium is around that 200 rupees or thereabouts, while on the downside, the 25,500 put as well, good amount of open risk built up, premium at around 60 rupees. Which brings us to the levels. Today, it appears that the Nifty is going to be starting off closer to around the resistance zone of around the 25,900 odd mark. The 25,900, the 26,000 mark, that's the crucial resistance mark that you're looking at. On the downside, the recent lows that we have visited in the last week itself, 25,350 to around 25,450, even going by the options data, that's going to be important. On the Nifty Bank, that yesterday as well did a relative underperformance, but you'll want it to find its form. And if you're looking at levels, well, the recent high will be important, 58,500, while the reference point on the downside, which it has been defending on a closing basis, is the 20-day MA. Though intraday, you have been seeing sometimes that number getting violated. In terms of stocks that you're looking at, maybe a couple of these stocks that have BR exposure, like Aditya Vision, good amount of exposure to Bihar. We'll have to see how the stock behaves. It's come up decently from the top, actually 10% from the top. So that's just one of the stocks that we'll be looking at in today's session.
And if I could add, I'd also be looking at the capital market stocks as well, because Grow is listing today. And the indication is in the so-called grey market that the premium has once again completely come off. 3-4%, that's about it. Remember, they're offering shares at the issue price is 100 rupees. We'll see where that listing ultimately goes, but that'll keep the capital market space in focus. Just a word on Asia. Asia is actually a nice shade of green, almost all markets, including markets like Hang Seng, mainland China, Shanghai Composite, All those markets are up and about. Japan is up. In Japan, the biggest news point, obviously, is SoftBank. SoftBank shares this morning fell as much as 10%. They've recovered a bit, but they're still down 6% after SoftBank went and sold its entire stake in NVIDIA. So that continues to be a big talking point. But otherwise, it's a positive-looking screen and a largely positive handover from Wall Street as well, giving us the sense that we will start on a fairly optimistic note, 150 points up as far as the implied open is concerned. Well, Arvind Sanger is with us this morning to share some ideas. Arvind, always a pleasure having you in. So first things first, looks like the shutdown is going to end. And there was this comment that Prashant was alluding to, Mr. Trump speaking to Fox News, right, where he said that, look, you can't expect someone who's been standing in an unemployment line for years to suddenly get ready to make missiles or chips, etc. So would you, draw any conclusions or any implications for Indian listed IT stocks because of this?
I think it may help a little bit, but I think the more important thing is there were concerns that some of the best and brightest who are coming to the US as foreign students may be disadvantaged by being too harsh on this H-1B situation. So I think this is more of a signal and a recognition that the US needs to attract the best and the brightest from the world to come and do all of the technology, high-tech STEM kind of work. Now, I think it'll also help Indian IT somewhat, but I don't think that's the central thesis. It is more likely that, a lot of the tech companies in the US, the major tech companies, have gone and pointed out that some of the brightest talent they're looking for, whether it's the AI race or anything else, they have to be able to hire talent globally. And so I think, yes, there will be some benefit for Indian IT, but I don't think that's the central thrust in terms of where President Trump or where the US industry is asking for breaks on the H-1B kind of restrictions.
Yeah, Arvind, I've been speaking of AI. Just your quick thoughts on what's the chatter around that you're hearing on the SoftBank selling the NVIDIA stake? Because every now and then, last 2-3 weeks, there's been this murmur around whether the AI trade is now becoming a little excessive. It has implications for global markets, right, including India.
Yes. Well, I think, I was just meeting some friends earlier today, and everybody was talking about the AI bubble. And I made the comment to them, as I'll make to you, that when everybody's talking about a bubble,
it's not a bubble.
It's going to take when everybody stopped talking about a bubble and people have said, okay, this is a new paradigm, that's when the bubble will pop. So yes, you're going to have pullbacks, you're going to have selling. But, I don't think that the NVIDIA sale reflects any great insights. And I think it's just profit taking because they have other investments to do. So I don't see that as anything, it's not a deep seek moment, let's put it that way. Are there challenges from Chinese models and from other things? Those are more concerning. But in terms of the investment, I was just at a conference today where the CFO of OpenAI was one of the speakers, and it's very clear that OpenAI and others are not slowing down. The demand for compute is only going upward and to the right. So there will be some surprise along the way. Maybe somebody will pull back, but it's not imminent.
In one way, I could use that same method. Just being devil's advocate here, within humor me. Morning, Prashant here. There's a lot of mainstream research which is asking the question whether we are in a bubble, and then all of them are answering in a firm no bubble. So when could you use that?
Everybody's asking the question. Well, when everybody's asking the question, Prashant, the question is there. It's in the back of people's minds. It's not. It's not a surprise. So in that sense, the fact that everybody's asking the question, even if they're coming to a conclusion that maybe it's not, there are enough people saying it's a bubble. And so it's not like it's a one-sided debate altogether. But I think the fact that everybody's worried about it and asking about it and questioning it, I'm not saying that it immunizes us from anything going wrong.
Yeah, it's one of the most asked questions, and one of the no is the most given answer. So, India, Arvind, quick thoughts where we are, because there is some upgrades. Goldman upgraded their view on India, the Indian market that is, and others have too. And there's a bunch of things coming together. Maybe this deal will happen. What's your view?
Well, I think, look, the Bihar elections are nice, but they're not really, in my opinion, needle movers. I think the US-India trade deal is much more important. And then, let's look at the economic tea leaves and see how things are developing. I think India has suffered from a time value and a relative correction all year relative to, most of my major other markets. So it's starting to get into the zone where, it's not the cheapest market. I think it starts to become more interesting. And I think especially for FIIs, if the trade deal happens and other signs that things are back on track in terms of, India. And the Indian rupee, I guess, has held up reasonably well in this whole dollar recent, volatility. So I think there are signs here that India is back on the radar screen. But, the one you'd asked about AI, the one area where India is unfortunately, sadly, missing in action is on the AI front. So that part it has missed out, but I think there are other reasons why India could be interesting.
Yeah, that sounds good. I mean, if it only starts showing up in the money flow, investors here will be very happy because FPI is still sellers for most parts of the month so far. But great conversation as always. Arvind, thank you so much for taking out the time, and we look forward to connecting again soon. Well, with that, let's quickly tell our viewers what's lined up on the show. Plenty of interactions coming your way at 8:30. We'll be connecting with Gautam Chaturya of UBS. The UBS India Summit 2025 kicks off today. We'll find out what the mood and sentiment is like. At 8:40, we'll have with us senior journalist Sanjeev Srivastava to decode these Bihar election exit polls. At 9 o'clock, we'll be connecting with the management of Zaggle, talk about the company's Q2 performance. At 9:20, Rana Gupta of Manulife Investment Management joins in. He's our market master of the day. At 9:30, we go back to the UBS India conference. Sunil Thirumalai will be giving us some perspective on the global front as well. After that, we'll be in conversation with the management of Fortis Healthcare, talk to them about their Q2 performance and the second half outlook. At 9:50, Baba Kalyani of Bharat Forge joins in to talk about their business outlook. And after that, at 10 o'clock, we'll be connecting with the management of RITES. They also declared numbers yesterday. Towards the end of the show, in our special segment, It's the Economy, Lata will be chatting with Santanu Chakrabarti of BNP Paribas on his stock picks after the BFSI Q2 results.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at BSE, Torrent Power, Biocon, Fortis Healthcare, and Max Financial. All of them will be reacting to positive news flow, while you have Tata Power, RVNL, PI Industries, Thermax, and Concord that will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. Well, plenty of earnings as we're in the final leg of the season, the earnings season that is. So let's straight away get to our team with the top 10 list of stocks to watch. Of course, we have the listing of Grow, but that's on the primary market action side. On the secondary side, it's probably more earnings and more earnings. Guys, morning to all of you. Vivek, how did Tata Power look?
Well, good morning. Tata Power, multiple levers. But essentially, this particular quarter for the entire power sector was expected to be quite muted, given the fact that FY26 so far has been a year of very moderate demand. So the Mundra facility was shut, given the fact that Section 11 was not extended. But what actually worked in Tata Power favor was the fact that the Odisha Discom, exceptional performance over there, and along with that, the solar cell and module facility, their profits as well as EBITDA doubled. So the weakness as far as the coal business and Mundra was more than offset by the performance as far as Odisha as well as the solar cell and module facility was concerned. Now talking about the numbers themselves, was expected to be slightly muted. Revenues was down 1% on a year-on-year basis. EBITDA, consolidated when we look at it, was down close to 12%. Margins too contracted, and profitability, given by higher other income, fell just around 1%. But three key takeaways from the media call that the company hosted last evening. Number one, they are on track to sign a supplementary PPA with the Gujarat government for the Mundra facility. That's very important. They're also looking to set up a 10 gigawatt solar module wafer and ingot manufacturing facility, and likely to receive an update as far as UP Discom privatization by the end of this month.
Okay, all right. Thanks a lot for that, Vivek. Let's hop across to Sudarshan. Sudarshan, BSE's numbers look quite good.
That's correct. So for BSE, the last 3 months, two issues that happened in the limelight. First, the change in the expiry day, and second, will the weekly expiry remain or go? And the outcome so far on both these issues has looked largely positive. Why do I say so? So when the expiry day was changed and the first weekly expiry day, when it was moved to Thursday, we had seen a turnover of almost 50,000 crore in a single day, and that was the highest ever. And second, the recent comment from Finance Minister and SEBI Chairman regarding the weekly expiry was taken positively, and the day this comment was made, the stock had moved 10% higher. Now talking about the earnings were largely positive and higher than expectations that put out by Bloomberg. On the operating front, revenue was up 11.5% on a sequential basis, and the largest contributor is transactional charges, and that was up almost 8% on a sequential basis. Even EBITDA has improved by 4%. Margin has seen a contraction of 64 basis points. That's the reason of higher regulatory charges, which has increased by 26%. But overall, it was a good set of earnings.
Okay, all right. So thanks very much for that. Torrent Power is the next one we're going to focus on, and Vivek has got details on this one. Vivek, over to you. Morning.
Well, largely aided by the fact that the merchant capacity wasn't idle, and in fact, the company had a set supply offtake agreement in place. That is what actually aided the strong performance, actually above the limited estimates that we were working with. But given the fact that Q3 was very strong, Q3 may be slightly muted given the fact that the supply commitments are largely over. So all eyes will be on any further short-term PPAs that the company would be able to sign. So what aided the performance? Higher contribution from the merchant power sales from the gas-based power plants. So revenues higher by almost 10%, EBITDA higher by 25%, margins expanding over 250 basis points, and profitability higher by 50%. Now the higher LNG sales, higher merchant power clearly aiding. Along with that, an important development, the company secured a 1,600 megawatt thermal power project in Madhya Pradesh, and the tariff were quite attractive at rupees 5.829 rupees per kilowatt hour.
Okay, all right, got it. Vivek, thanks very much. So Torrent Power is going to be on our list. Ekta, good morning. What about Biocon?
Well, good numbers coming in from Biocon. So the revenue came in at around 4,295 odd crores. The EBITDA came in at around 835 crores. Street was anticipating around 843 odd crores, and margins of around 19.4%. The profit came in at around 132.8 crores, again better than expectations. So overall, it was a good quarter for Biocon, which was really led by the generics and the biosimilars business. So generics was aided by launches such as liraglutide in key markets. So that segment was up around 24%. The biosimilar segment, which basically consists of the biologics business, was up around 25% on a year-on-year basis, with margins expanding according to the company as well this quarter. So overall, steady quarter for Biocon. Commentary will be important to assess how the stock moves as well.
Okay, all right. Thanks, Ekta, for that. Going across to Vinny. She's here to tell us about RVNL. Morning, Vinny.
Hi, good morning. So for RVNL, its Q2 performance, weak on a year-on-year basis. Sequentially, we are seeing some bit of an improvement. Now, our revenues, they are up by around 5.5% YOY. EBITDA margins continue to be a bit muted. So 4.22% is what the EBITDA margin came in for the quarter versus 5.6%. And profits of the company have seen a decline of around 20%. Now, do not forget that revenues were in line with what the BBG estimates were, as well as margins. When you look at it, that was below what the street or analysts were expecting. One concern that I would watch out for is just that the operating cash flow has turned negative. But yes, we'll wait out for details on that one, maybe in the con call that is there today later. As of now, I would give it a red, but sequential recovery is something that we're keeping an eye out on, and that could maybe lead to a recovery in the stock as well.
All right, Vinny, thank you very much for that. RVNL in focus there. Fortis Healthcare is what we want to talk about next. Ekta is here for this one. Ekta, morning.
Well, good numbers coming in for Fortis. Revenue up around 17 odd percent, EBITDA up around 28% year-on-year. Margins have come in at around 24%, and a profit which has expanded Q-on-Q as well as year-on-year. So hospitals, which is the bread and butter business, was up 19.3% year-on-year. Margins expanded to 23% versus 21.4% for that segment. And the diagnostic business did well as well. Revenue was up 7.1%, but margins have expanded all the way to 29%. So good going for Fortis.
Okay. All right, Ekta. Thanks a lot for that. In fact, we have the management of Fortis Healthcare who will be joining in at around 9:40 a.m. to talk about their past quarter's numbers. Let's go across to Sonal. She's here to tell us about PI Industries. Morning, Sonal.
Good morning, Nigel. Well, for PI Industries, the numbers were lower on a YY basis. This was something which was expected. The numbers are better than the poll, though. Revenues down 16%, EBITDA was down 13%. We had EBITDA margins which were up 74 basis points, but the net profit declined 19%. What led to the decline this time around? It was an 18% volume decline that we saw in agrochem exports, which is the CSM business. Domestic revenues declined by 13%, and the volumes there declined by 9% on a YY basis. The company said that in the quarter gone by, domestic revenue was adversely impacted. They're expecting a better second half, and long-term growth plan remains intact, but there could be some volatility in the short term. And in the CSM, on the export business, they have cautious optimism on for the second half. But do remember, they've maintained their single-digit revenue growth guidance, and the cautious outlook is what it was in the first quarter as well. So PI Industries will be on our radar today.
Okay, all right, got it. Thank you for that, Sunil. Let's hop across to Vinny, who's watching out for Thermax. Not a great quarter, Vinny.
Yes, not a great quarter, Surabhi, for Thermax this time as well. Now, a miss coming in on all the fronts, whether revenue, margins, profits of the company, all of them missed this CNBC TV18 estimates as well as the street estimates. Execution, that continues to be a challenge for the company. Now, overall, when you look at the margins, they came in just at 6.96% versus last year of around 10.63%. Impact on the margins was due to the adverse product mix as well as project overrun cost that was there. That was something that impacted the margins, and margins across all the segments, whether you look at industrial product, industrial infra, green solutions, chemicals, all of them, there was weak performance in terms of margins. Order booking, when you look at it, the order inflows, that saw 6% growth on a year-on-year basis. Order book also saw 6% growth on a year-on-year basis. Now, order booking mainly was higher due to improved order bookings that came in from the industrial product segment. Industrial product segment overall saw 12% growth. Margins also a bit of a better margin versus other segments. Industrial infra segment, that saw lower margins, negative EBITDA loss that came in over there. Mainly, that was the impact that came in due to the product mix over there as well. Profitability was also impacted on that industrial infra side due to project costs. So that is what we're keeping an eye on. We're expecting red here for the stock.
Okay, all right, Vinny, thank you very much for that. So it's like an earnings treadmill, right? Non-stop. Concor is the next one. Mangalam is here with details. Mangalam, morning.
Well, so it's a softish set of numbers which have come in. 2.9% growth in the company's revenue. The EBITDA has actually declined by about 1.1%. The second quarter is usually seasonally weak as well. So the margins, they were compressing by about 100 basis points. And the net profit was just about 3% higher. Because the EXIM and the domestic revenues both grew 3%. We already had the volume growth where the EXIM volumes increased by 8.7% and domestic volumes increased by 17%. The conclusion is that there was a decline in realizations, and that's weighed on overall performance. Is the company doing that because there is less volume generally, or is it doing so because there are market pressures? Those are a couple of things that we'll probably get to know from the company's conference call. But for now, going with red on Container Corp.
Okay, all right, got that. Mangalam, thank you. Yash is joining in for Max Financial. Yash, how are the numbers?
Well, the numbers are very, very strong for the second quarter as far as Max Financial Services is concerned. The numbers beating CNBC TV18 poll on almost all the counts. So, of course, APE was a beat to CNBC TV18 poll in terms of absolute growth, growing at 16%. Retail AP was in line with our poll, growing by about 9%. VNB, a strong beat to CNBC TV18 poll, as well as a very, very strong growth of about 25%. And that led to a strong beat on the margin as well. We were anticipating margins of 23.17%. They came in at about 25.49%. So a strong beat to the poll and up about 189 basis points at 25.49% versus 23.6%. Going with green, the stock hasn't done much in the last 3 months, in the last 1 month, all working for the stock today.
Okay, all right, Yash. And by the way, you'll hear from the management a little later in the day. I think in the 11 o'clock to 12 o'clock wheel, you'll hear from the Max Financial Management. 16:35 is where it ended at. Well, Manisha is now joining us with a roundup of all what is happening in the commodity space and what is top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, mostly commodities are trading in the positive in the Asian markets right now. Take a look at the gold and silver prices, and we are looking at a 3-week highs, and both of these precious metals trading very close to its all-time highs yet again. There is support, of course, coming in because of the decline in US dollar and expectation of a Fed rate cut for the month of December. But it's not just precious metal. The base metals continue to do well. So whether it's copper or aluminum, which is trading at a 3-year high, also is looking support because of the decline in supplies and production guidelines going in the future. You have the crude oil price is also rising for a third straight day. Rubber is trading at a 1-week high. And many of the other agri-industrial commodities like a cotton and a cocoa also seem to be trading at a multi-week highs. So today in Asia, it really does belong to commodities. Almost everything trading in the green.
Okay, all right, Manisha, thanks very much for that. We'll take a break. We are back, and we have the first of our guests from the UBS conference, which is, of course, getting underway. Gautam Chachoria of UBS is with us from the sidelines of the UBS India Summit 2025. We are back. Welcome back. The UBS India conference, it's a big one, which is getting underway here in Mumbai. Gautam Chachoria is with us. He's head of global markets India at UBS. Gautam, great to have you with us here. Appreciate you joining us. Action-packed next couple of days, Gautam. Tell us a little bit about the size and scale of conference, what you're aiming to do here. Of course, I mean, the basic aim at any conference is getting investors face time with corporates. But what do you plan to sort of, what are the big themes in that sense, which you hope will come up and get answered as part of this process?
Thanks, and good morning, everyone. Again, very exciting. It's a bigger event this year than last year and earlier. We have more than 250 plus investors and 65 or 70 odd corporates. But again, beyond that, we have interesting panels, including from government officials, ex-RBI officials, panels on consumption, on AI, on manufacturing, defense. So host of thematic panels, which we have curated for our investor base to hopefully get something out from this conference. And beyond that, we have multiple tours going on. Like we did a couple of days of macro tour in Delhi and Bombay last couple of days. And we have thematic tours on the ground consumption, manufacturing, defense, etc. Again, the big themes, obviously, from talking to investors, this is still early discussions, is around what happens to growth in India second half and later, and also the trade deal, and the big longer-term thematic around manufacturing as to whether we see more manufacturing, specifically around defense, but in a broad way, pick up in India.
In terms of the foreign participation, Gautam, hi. So, what is your expectation in terms of just where investors are coming from? Because a lot of them have given India the skip, right, in this calendar year. They've gone to other Asian markets. And the biggest grouse is that India doesn't have a deep tech story. So, what's your sense? Do you see that tide turning, even in your conversations in the run-up to the conference?
So look, a few things. One, we are seeing increased foreign investor participation this year. So we have more number of investors traveling. And this is across the world, not just US, but across countries in Europe and even Asia. Beyond Hong Kong, Singapore, we have investors attending the conference. Okay, so that's the first point. Second is, look, foreign investors have not been investing in India in aggregate for last 5 years, not just last few months. Beyond the yearly buying and selling, net they haven't invested literally anything over the last 5 years. The last few months, obviously, there's an AI and tech thing. There's the India-US trade deal, valuations, and opportunities in other markets in Asia. So that's not helped also. But what we have seen in the last couple of months, and more so in the run of the conference also, is we are seeing interest pick up in bottom-up stock ideas. So we're still not seeing foreign investors talking, okay, let's allocate a lot more money to India, it's bottoming out, etc. But we are seeing in the last 2 months a bottom-up discussion. And it's across sectors, not just one sector. Whether it's financials, consumption obviously, but even manufacturing, defense, etc. We're seeing a lot more discussion from the team here, sales and research, with foreign investors on bottom-up ideas.
All right. Hi, Gautam. Good morning. Good to see you, Ben. And you were quite positive on consumption, namely the two-wheeler and the four-wheelers. And actually, the last couple of months have worked out very well for them. What is your view right now? And from the auto pack itself, consumption/auto, what do you like?
So look, broader consumption theme we continue to like. There are enough tailwinds in this sector. Rural, urban, credit, obviously the government policies around GST and upcoming pay commission and some of the freebies. But again, it has to be more stock and sub-segment specific, not just sector specific, but sub-segments. Like in autos, the theme which we have been pushing is more premiumization. And within two-wheeler, scooter and EVs rather than a broad two-wheeler or broad four-wheelers. So it's also stock specific. It's not a very broad-based view. Again, in the last couple of months, everything has benefited. But for the discerning investor going forward, these themes will matter more because that's where we see higher visibility and higher comfort of growth actually playing through. So we are much more comfortable about the premiumization theme than aggregate, say, car sales volumes, which at the margin, in fact, two-wheeler and cars both, the expectations might be running a bit ahead versus what our analyst thinks. We are much more cautious on the industry level volume outlook being priced in by market. But at a stock and sub-segment level, there are opportunities. The broader consumption beyond autos still looks attractive, whether it's retail, whether it's food delivery, QSR, selective FMCG also. So broader consumption, we remain constructive.
Okay, so constructive on some of the broader, consumption themes. You mentioned, manufacturing, and there will be obviously more conversations around that theme at the conference as well. Right now, what's the house view? And when it comes to the whole capex side of the market, what is the position? Because a lot of these stocks, obviously, through the course of the last several months, they've come off their very high, very lofty levels.
So again, similar to consumption, there is pockets which we are very, very high conviction on, pockets in defense, but also in the capex cycle part, specifically around energy, around renewables. They remain attractive, both near term as well as from a longer term cycle, including what they're pricing in. So that remains an attractive space in general for us. And again, in the last quarter or two, we are seeing some pickup or at least stabilization in private capex. It's no longer a drag or not growing enough. Will it be a proper full-fledged private corporate capex cycle? I think it's too early and premature. And one of the things which we have been telling and we'll highlight again, it's that one of the things we have to remember, don't compare it with what we saw in, say, 2004 to 7. That kind of private corporate capex cycle, if you are defining in that parameter, that's going to be difficult. But from where we are now, uptick in the next couple of years is fairly likely.
I know index targets are what they are, Gautam, but 2026, what's the Nifty target for you?
So we don't have an official target for Nifty for next year, but we do see a small upside from here for sure. Look, at a broader market level, there is the flows from retail investors, mutual fund, which will help stabilize markets. On the other hand, there's also a big pipeline of capital raising, which also sucks away some of the liquidity. So on a technical side, it seems to be a more range-bound outlook. But on the fundamental side, that's the key part. So we are expecting growth to pick up as the policy easing flows to the economy. The only joker in the pack is some level of sentiment and uncertainty, specifically around US trade deal. I think that's also a question of time. We will have clarity around that, and then hopefully we'll see a growth pickup. Yeah. And that will be the key for markets to break out of the band we have seen in the last couple of years.
Yeah. You mentioned AI once or twice there, Gautam. We had S. Narain who was saying, and others as well, that yes, this AI, for the lack of a better word, mania around the world fades a little bit. Maybe people will start to notice other things as well, foreign investors particularly. Do you believe that?
So look, there are strong views on both sides. Even a global strategists and economists have published something around what it could mean. Again, the way we look at it, the benefits of AI is going to be long term. Where we are right now is very early stage of creating the capital base or capital stock to drive the AI benefits. We are nowhere in the long-term cycle of the benefits of AI flowing through to normal businesses in their normal workflow processes, etc. That's very early. So we are still at a very early stage of creating the capital stock. Now, is there a bubble in the creating the capital stock? It's happened at a very fast level. The business opportunity is real. The answer to that will lie how quickly the benefits to the business flow. So I won't say that it's necessarily a bubble, because this is a big change in how businesses are done globally, not just for AI companies, but also normal businesses in terms of how they use, leverage and apply AI in their business. So I won't get carried away by simply saying it's a bubble.
Okay.
Too early for that.
All right, Gautam, thank you for joining us this morning. I wish you all the very best for the conference. I'm sure it's going to be action-packed, and we look forward to connecting again, maybe once it's in its final lap, to get a sense of what investors are really saying. Thank you for joining us today. Well, that's Gautam Chowchoria saying that AI is definitely not a bubble. Prashant, so one more of the nods, right? Everybody's asking the question whether AI is a bubble. We had Gautam say, no, it's not. One more of the nods.
The thing is that if something is a consensus view, how can it happen, right? That's the basic, and that's correct, absolutely right? But the point is, what consensus? The consensus is no, or consensus, the question is being asked. That was the...
I think, it's getting into high realm, right? We're moving into AI zone. But okay, I think we'll come back down and look at the here and now, because there are some very interesting developments at Tata Trusts. Now, the Tata Trust has named Neville Tata and Bhaskar Bhatt as new trustees. Let's go across to Parikshit to understand this. Parikshit, of course, was talking about this even before the news became official. Parikshit, fill us in on what brings about this change and what next?
This will be a development which will have long-term implications for Noel Tata and also the way Tata Trusts operate. So Noel Tata has inducted, along with other board members, through consensus, Neville Tata, who is Noel Tata's son, and Bhaskar Bhatt as trustees of the Sir Dorabji Tata Trust for 3 years. At 32 years old, Neville will be the youngest trustee of Tata Trust. He currently is the head of Trent's grocery business Star Bazaar. The other important development is the induction of Bhaskar Bhatt. The 71-year-old was the MD of Titan from 2002 to 2019, another veteran of the Tata Group. When you speak about the Sir Dorabji Tata Trust, it's the principal trust of the Tata Trust, which has a 28% stake in Tata Sons. We know how Dorabji Tata Trust and Ratan Tata Trust together have a 66% stake in Tata Sons. Now, what happens after the changes to the Maharashtra Public Trust law is that Noel Tata will be the only permanent trustee for life of Tata Trust. Venu Srinivasan has been reappointed, but only for a 3-year term as vice chairman. So the existing trustees of Sir Dorabji Tata Trust and Noel Tata, Venu Srinivasan, Vijay Singh, Pramit Zaveri, Darius Kambata, and to add to that, Bhaskar Bhatt and Neville Tata. Why has Venu Srinivasan's term changed and been revised? On October 24, we had reported that Srinivasan had been reappointed permanent trustee for life. But there was a Maharashtra Public Trust Act, the amendments to it, which came into effect on September 1st. And after that, his appointment for life did not comply with the new law. And therefore, he has now been appointed for a 3-year term because the law has made changes to the appointment and tenure of permanent trustees. So let's see how the Tata Trust board takes forward the agenda of Tata Sons, what kind of relationship the two have in the months to come. But clearly, these are developments of major significance.
Okay, all right. Thanks a lot, Parikshit, for joining in and giving us that big update. We'll keep coming back to you. Well, time to slip into a short break, but on the other side, we'll be joined by senior journalist Sanjeev Srivastava to decode the Bihar election exit poll. Welcome back. Well, there was a record voter turnout in Bihar as 122 seats across 20 districts go to polls in the final phase of the state assembly elections. A News 18 exit poll gives NDA the edge. Do note, votes will be counted on Friday. To discuss this and more, now we're joined by Sanjeev Srivastava, the senior journalist. Hi, Mr. Srivastava. Good morning and good to see you in. What do you make of the exit polls? Do you think, your numbers were aligned to what the exit polls threw up, or do you think there can be an out-of-the-box surprise that comes about? And also, what does this mean for the ruling BJP? Clearly, if they bag Bihar, then, that puts more ammunition to them.
Oh, good morning, Nigel. So I agree with you on all the points that you have just underlined. But what if they had lost? It would have been a real big crisis. Because if they had lost, then Nitish Kumar is there. He's one of the main crutches of the ruling government. But I don't think that is happening. I go with the exit poll numbers broadly. We were there for about a week from 1st November till 7th. And at least in the areas where we travel, Patna, Darbhanga, Muzaffarpur, Purnia, Kishanganj, one could sense that the opposition has lost the plot and it is not able to somehow galvanize either its cadre or the voter. And you could also feel and sense the lack of big leaders, star cast. On the NDA side, you had it was like a multi-starrer from Prime Minister to Amit Shah, to Nitish Babu, doing 5-6 rallies a day, to Chirag, and a number of hosts of central ministers. From the NDA, from the Mahagathbandhan side, it was largely left to Tejasvi Yadav to shoulder the burden of the opposition alliance. So from a distance, it looked closer, but traveling through Bihar, at least this part of North Bihar, it looked fairly that NDA clearly had a decisive edge. So I would go with the numbers.
Yeah.
All numbers. Let's see. Still, 14th is the real result.
2020, 2015, Sanjeev, right? Both were bit of a, between exit poll and actual results, it was, there was a wide difference. So
that's very interesting, Prashant, you point that out. Yeah. Exit polls, yes, they go wrong sometimes. In Bihar, they go wrong more times than in other states. So that is a bit of a rider. But again, at the risk of, one can never think of oneself as having understood Indian elections or how the voter will behave. But the sense we got traveling through these 4 or 5 major areas and for a week, which is not a lot. You would really have to travel for months to really figure out an election. Maybe you can still get it wrong. But the sense was overwhelmingly clear to us that the NDA has an edge. So if there is a surprise, we'll also be humbled and accept it on 14th. But I don't think that's my assessment.
Okay. Got that. The Prashant Kishore factor, negligible, Sanjeev?
So 2 things, Prashant. One, that Nitish health, whether he's fit enough and everything is fine, and Prashant Kishore's X factor. These 2 things both looked bigger and more significant before you reached Bihar, sitting in Delhi or wherever you are. But once you hit the ground, both factors were diminished. There was Prashant Kishore, the areas we traveled in, we didn't find much traction amongst the voters. There was so much more traction amongst the pundits and the observers. Similarly, Nitish Kumar's ability and his mental faculties, physical health, and how fit and strong he is to govern, able he is to govern, those also look more like issues amongst the chattering classes of the political observers, pundits, journalists, fellow politicians. For the voter, if anything, it was reverse. They felt, "Hamara baap booda ho jayega, to ghar se nikal denge kya? He's fine." So Nitish Kumar is truly an enigma. I think after Naveen Babu, who lost last time, Odisha, Nitish Kumar is truly, because like I keep saying, Tejasvi comes across as the most popular guy on the road. But Nitish Kumar in the end tilts the balance, that who will win, who will form the government, that for the last 20 odd years has been decided by Nitish Babu.
Yeah.
And it's likely to be the same this time. Now,
Sanjeev,
the only question which remains is where...
Yeah, lots of questions, and this is a discussion that we can continue. And we will continue to have, and we'd love to hear your thoughts when the actual results come through. But you're saying for now you'll stick with the exit poll results and what they're showing. Thank you very much, Sanjeev. Appreciate your time here on CNBC-TV18. 4 minutes to go for market pre-open session to kick off. We have the management of Zaggle joining us on the second quarter numbers which have come through. We also, of course, will get you technical calls. Sudarshan and Mitesh with that, as always. Stay tuned.
Welcome back. So we'll start getting our pre-open rates. In fact, they have started coming through, 79 points up on the Nifty as of now. Remember, the implied open was telling us that we'll probably start gap up 150 points higher, given the exuberance around the Bihar exit polls and the fact that, there's some positive overtures on the Indo-US trade deal front as well. We've got our technical experts joining in. Sudarshan Sakhani is with us along with Mitesh Thakkar as always. Gentlemen, good morning to both of you. Sudarshan, let me open with you. On the index, what's the strategy today?
Good morning. Well, I'm very pleased. On Monday, we said go and buy. Yesterday, I said go and buy, and Nigel was there, and he is an F&O expert. So I explained that there will be a dip, there will be some choppiness because of F&O expiry. Ignore it, stay long. So anyone who had the courage to stay long on these 2 days is making a decent amount of money. Today is a different day. First of all, I'm not a big fan of buying gap ups. If you see a gap up, take profits on half your positions and tighten your stops very sharply to 25,700. If it goes below that, exit with all your profits. If it doesn't, then look for a small dip to re-enter for those who don't have positions. But today is not a good day to buy.
Today is not a good day to buy, and 25,700 becomes an important stop loss for those who already are running long trades. Got that, Sudarshan. Mitesh, what about you? How are you looking at this opening? If we get a gap up between 70, 100 odd points, what should the approach be?
My idea is that 25, 750, 800 was my first target for this bounce back. And once we start getting past that, then I think, we'll look at a retest of 26, 100. So I think 25, 800 is the level which I'll watch closely. Post the gap up, if there's not enough follow through, not enough strength on the upside, then maybe take profits, reduce a long exposure and wait for a pullback to happen and then enter. If we continue to slice or get past 25, 800, I would maintain my long bias and head towards 26, 100.
Okay, all right. So we are exactly at that level, critical levels on the index. And the index is right now looking at a 100-point up move as we are checking the pre-open. What about individual stocks, gentlemen? Mitesh?
I've got a lot of IT names. So Persistent was a buy yesterday as well. Now can be bought afresh with a stop at 50.70 for targets of 61.50. KPIT Tech is a buy with a stop at 11.90 for targets of around 12.55 to about 12.60. Buy on Bank of Baroda with a stop at 282 for targets of 295, and Coforge is the final buy call. Keep a stop below 1780, look for targets of 1830, 35.
Gentlemen, morning. Sudarshan, morning. What about you? What are your trades?
Well, Hindustan Zinc is a buy with a stop under 480, and metals have been coming in this list. HAL is a buy with a stop under 48.65. Remember, I have some small shares in HAL. BEL is a buy with a stop under 420, and Manappuram is a buying opportunity with a stop under 270. It's an all-buy list. It's much better to focus on stocks today.
Okay, focus on stocks. Got that point, gentlemen. Thank you very much. We'll come back to you a little closer to market opening. For the time being, let's put the spotlight on some interesting earnings reactions. That's BSC. That's definitely looking very, very good in the pre-open session, 6% higher. The other is Zaggle. Zaggle, by the way, has actually increased its top-line guidance for the year. It was 35 to 40% earlier. Now they're saying 40 to 45%. So let's straight away get to it. In fact, we have the management joining in to talk about what has been a strong second quarter for the company. Avinash Gokandi, MD and CEO at Zaggle, is with us now. Avinash, great to have you in. So what makes you confident about this guidance revision? Is it, more contracts, more deals coming through? I mean, just explain to us. It's also been overall a very good quarter with margin expansion.
Yes. Thank you so much for having me, Subi. Good morning. It's been a great quarter and we see great tailwinds, lots of momentum building in the business, lots of consolidation happening in our space. We're seeing a lot of opportunities come to us. And we've been speaking about this consistently, and that is actually reflecting now in the numbers. So that's what makes us very bullish. We see great opportunity for the coming quarters as well.
Okay, all right. Hi, Avinash. Good to see you in. So upping the top line guidance and your margins as well, seem to be in a good space. Tell us what's the trajectory out there. And also, since you're sitting on a pile of cash, you had hinted last time around there could be some more inorganic growth. Should we hear something in the second half of the year?
Fingers crossed, absolutely, yes. We will announce hopefully more interesting activities in the inorganic side. And on the margin side, look, we've already given a guidance of 10 to 11% for this year. We've said in about 5 odd years, we will be at about 14-15% level. And about 5 to 7 years, we'll be $1 billion in revenue. So we are on track to achieve that. And things are looking great in terms of momentum for us. And a lot of new areas like our fleet management has started to really show great traction with exceptional wins, Adani Total Gas being a very big one, Medha Gas being another one. So a lot of big wins coming in, newer lines of business as well.
Okay, all right. And you said $1 billion of revenues is where you're going to be looking, you're going to be headed by when?
In about 7 years, yeah.
In about 7 years. And how much of that would be inorganic?
Difficult to say that with precision. 7 years is a very long time. I may lose all my hair by then, but
the street will be okay if you lose your hair as long as you get to the $1 billion.
We will, God willing, yes, we will. And a lot of it would also be organic. See, end of the day, the business so far has been built largely organic, and we see great tailwinds. Overall spend management as a space is really getting appreciated in India today. And our Brome product, where we are seeing awesome traction in terms of, the petty cash, the utility bills. So many companies have petty cash leakage. They have compliance issues there. The system really works beautifully, overlaying on top of UPI. UPI typically is a B2C use case in India. We have converted that into a B2B2C use case here. And that's the innovation where it allows us to be able to give the same benefit to the user while giving all the controls to the corporate. So it's a great marriage there.
So, Avinash, you have retained your EBITDA margin guidance. You've upped the revenue guidance. EBITDA, you're saying margins should be around 10 to 11%, right? This is despite, I think, in the second quarter at the gross level, there was some pressure in margins. Can you just walk us through what's going in the margin mix and, which of your businesses will be perhaps more margin accretive in the second half?
See, margins and momentum in our business always is second half H2 heavy, right? There is seasonality in the business. It's a 40-60 sort of split, give or take. And margin expansion also tends to happen in these quarters at times. In some previous years, it's not been the case, but operating leverage has really started to kick in a big way. So we see the opportunity to expand margins in the coming 2 quarters is also there. Overall, I see margins growing this quarter. Also, our margins have improved from last quarter as well as last year.
Avinash, good speaking with you, and seeing the hair on your head, I don't think you will. You got to worry about that at all. I mean, so
doesn't really matter in the larger scheme of things, honestly.
Nice crop of hair there. Thanks very much with that aspiration, the guidance, and good luck to you and your team as you continue to execute. Appreciate it. Well, it's Zaggle, which is up about 2 or 3% or so on the price right now, 385. Well, I think maybe just look at the end of the pre-open session, right? Just a bunch of names as we kick off the session. And, we're going to shine the spotlight on Tata Power in just a bit. And Vivek will come up with that as well. But some of the other kind of stocks, right, which should be up on your screen. IT services, maybe just look at whether there is any reaction whatsoever. Infi, TCS, HCL, Wipro, etc. IT index is up 0.5%. By the way, I think yesterday the IT services index did well, and day before yesterday they did quite well as well. So it's a higher start, but small. 1/3%, 0.5% in that range is what you have. BSC should come up on your screen. The reported numbers, and we should look at that. I mean, the other one, of course, BSC is up 5%, and I think I saw a 2,900 rupee target by I think it was Jeffries or someone who covers it. Tata Power will come up on your screen as well, which is related results reactions. There's a bunch of other stuff. Yash was telling us that Max Financial has reported a strong set of numbers as part of top 10. We should look at that. Max Financial is down about 2%, 2.25% at this stage. What else? Thermax, Container Corporation, PI Industry, so many other things which came through. And of course, I mean, the Gokuldas export stock, which I was only half jokingly calling as the India-US trade deal indicator. It was, by the way, it ended about 4% higher yesterday. Flattish right now, nothing very much. 870 on Gokuldas exports out there. 9:10 call. Sudarshan and Mitesh are with us. Sudarshan, what do you have?
Manappuram, buy Manappuram with a stop under 270.
Okay. Manappuram for Sudarshan. Mitesh, what about you?
I'll go with a buy on persistent for targets of 16,150.
Okay. All right, gentlemen. Thank you very much for those calls. So 140 points up on the Nifty, very much in sync with what the implied open was indicating at 8 a.m. Tata Power reported numbers, and the quarter didn't look that great. They had a shutdown in Mundra. Coal business was also a bit sluggish. Back to Vivek for more details on what brokers are saying. Vivek?
Well, that's right. So many moving parts, especially when you look at a large regulated entity like Tata Power. And like you rightly mentioned, given the fact that Mundra was shut down, Section 11 was not extended. That was one thing, that the street knew would happen. And along with that, even when you're talking about some of the other issues that the company was facing, especially with regards to weak power demand, also went ahead and impacted the overall performance. Now, especially when you're looking against that particular backdrop, also given the fact that Indonesian coal mine profitability was impacted due to moderation as far as coal prices was concerned, the other aspects of the business stepped up this time around, especially Odisha Power Discom performance was very strong, up almost 4x on a year-on-year basis. Also, the solar cell and module manufacturing facility ramped up as well. So that is something that actually offset some of the other negatives in this particular quarter. Now, when you're talking about what brokerages had to say, Axis Capital has maintained a buy stance. What they're saying is that one positive was the company reiterated the guidance of close to 25,000 crore capex in FY26, especially in the backdrop that renewable energy capacity addition was quite muted in H1, but the company expects that to ramp up significantly in H2. JM Financial has maintained a buy stance. They've gone ahead and raised the target price to 475 from 436 that they had earlier. They're saying some of the key highlights include the stabilization of the 4.9 gigawatt integrated solar cell and module manufacturing, acceleration as far as the third-party rooftop solar, and the order book there is quite steady at little over 1,000 crore rupees. Odisha Discom PAT up almost 4x, and one of the key kickers and the key triggers will be the anticipated signing of a supplementary PPA with the Gujarat government as far as the Mundra UMPP is concerned. Once Gujarat is done, there will be expectations that there could be PPAs coming in from the other states as well.
Okay, all right, Vivek, thanks a lot for that. Let's focus on the big mover, though, on the upside. BSE, the stock had come down closer to around 2,000, and now it's on the way to around 2,800. Numbers look good, sir.
That's correct. So what we have talked about, that currently, like all the turnover data that we have been seeing over the last few months, it remains strong. And after the expiry day was changed, the company continues to say huge turnover. On the first day of the change in the expiry date, it had seen a turnover of almost 50,000 crore. And as far as the earnings are concerned, the company has reported earnings that are higher than Bloomberg estimates. On the operating revenue front, it was up almost 12% sequentially, 7% higher than the expectation. And transaction charges, which is the largest contributor to the revenue, was up almost 8%. Even EBITDA has increased by 10.4% sequentially. Margins see a contraction of 64 basis points. That was mainly due to higher regulatory charges, which had increased by 26%, but overall earnings look very strong.
Okay, all right. Thank you for that. So clearly, BSE is one of the key stocks. And I was just looking at, since we'll have that Grow listing, and Grow is in all probability going to overtake, I mean, all the others in terms of market capitalization, it's all set to list somewhere around 65,000 crores of total market cap. So stocks like Angel, Motilal, MK, a lot of the other brokers will be in focus as well, though the indication was that it'll probably be a flat start.
Absolutely. And I think, you know, it'll be right up there, right? Largest discount broker, by the way. So it's going to command a very large market capitalization when it opens up. So what do we have? First rates are starting to come up, 25,828. It's about 0.5% higher. Nifty Bank is up about 0.35 or so, 0.5 I think now. So settling down. Small cap index is higher, mid cap index is higher. So it's a pretty green looking screen out there. 25,800, we're already there. Next stop is 26,100. Those are the levels we put out in the morning. So let's see if the market consolidates around this one, around the 25,800, or it continues to march up. But it's a good gap up that we have on our hands. The CNBC-TV18 heat map gives you a quick sense on the Nifty 50 names, how we are starting. So you got Max Health and Bajaj Finserv on one end. Bajaj Finserv, Bajaj Finance were the two big losers yesterday. There's JSW Steel, which is in the other end, which is the loser. JSW Steel and Nestle in particular. So 117 points higher on the Nifty is what you have. Surabhi.
Yeah, absolutely. Recovery in the Bajaj twins. That's something to track this morning. Bajaj Finance as well as Finserv. Finserv also got smashed yesterday. Both of those stocks are up between 1 to 1.5%. Max Healthcare pushing a gain of 2%, making it the best performing stock on the Nifty this morning. Reliance is batting quite nicely for the Bulls. Reliance is up a little over 1%, 18 bucks higher on Reliance. So that one's quite steady. And the IT names, they have continued to chug along quietly so far this week. And in 3 days alone, some of the large cap IT names have put on between 2 to 4%. So quiet gains coming through for TCS, HCL Tech, Infosys once again this morning, taking their tally to about 2-3% for the week. Bharti Airtel is the other one that's on the upside. Eternal is up about 1.5%. On the downside, not too much, apart from JSW Steel, maybe a little bit of red on Sun Pharma and HUL. But that's it. Nifty's quite steady with a gain of about 128 points, 25,800 plus. And this is where our technical experts were saying this is where the big fight between the bulls and bears will be. And we'll see over the next couple of hours who prevails. Nigel.
Well, that's right. You know, Kirloskar Oil from the broader markets, that's a stock that's doing very, very well. I'm just looking at the revenues. That's up closer to 30%. The EBITDA margin as well, holding closer to around 20%. I think the street likes the big top line growth that we've seen on Kirloskar Oil. So that's clearly the stock of the morning on the upside. BSE already pointed out that stock has opened up a gap up. GSFC, that's another stock that's reacting positively. You have Belrise as well that came out with its set of numbers. I was reading a first cut, Jefferies first cut. They've been quite positive on the stock. They like the numbers. The stock is up closer to around 2%. And Zaggle as well. Management just joined us, sounding very optimistic. And the street is buying into that. What else is doing well? Ecos India Mobility, the stock is up 14%. Bazooka move is what we're seeing on this one. Big up move on this particular name. Parag Milk is another stock that's up 8.5%. So good move is what we're seeing out there. I think these are earnings reactions that we're seeing. And IOL Chemicals as well. The numbers look good, very good on a year-on-year basis. I recall having a look at those numbers. So that stock is well up closer around 10%. What's not doing too well? Orchid Pharma. That's selling off. That's down closer around 8% as we speak. So big negative reaction to the numbers. Orchid Pharma now down 8%. Let's pull that one up. PI Industries was down 3.5%. Numbers a little bit softish, but it's recovered a little bit from the lows that we saw a couple of minutes or so ago. Now it's down closer on 2%. And Landmark is another stock that's under pressure. Net, a good start, but you'll want to end with a solid gain because the gap up should not get sold into. We'll give you a sense in terms of the structure of the market as well.
No, just one more stock, Nigel, to add to your tally. Look at Syrma Go. Syrma is up 5-6% today. It was up in a big way yesterday as well after numbers. The numbers are very solid, 150 basis points margin expansion, some 37% top line growth. So it's really piling on the gains this morning as well. Prashant.
No, absolutely. And I think, Syrma continuing the gains. Just a bunch of other new names, right? So I think Max Financial we should pull up. So it's up about 3%. And I mean, the gains are okay, but volumes are very large. It's the third largest volume-led gainer on the NSE right now. Kirloskar Engine Oils is shooting up 12%, right? 1,057 on Kirloskar Oil Engines and on your screen now, about over 500,000 shares on the NSE now. There is Yatra, which is coming up with a 6.5% pop at this stage. So 176. Transformers and rectifiers, it's not the price, it's the volume. So 2 days, the stock crashed, I think, 20-25%. It's unchanged, but look at the volumes already on this one. So lots of back and forth activity there. 1%, 1 million shares on in terms of volumes on NSE. Something called I value. Did we mention this? 6% on this one, and it's only coming up on my screen because it's got volumes, huge volumes. 316 on I value. We'll try and look up the stock on this one. IOL Chemicals, I think we mentioned this. LTI Mindtree is up about 2.5%. EID Parry is up about 4%, and so it goes. So it's about 2:1 in favor of advances at this point in time. Hindustan Copper had a massive move yesterday on the upside, ended about 7% higher. It's the top volume-led loser. It's only giving back 3% of that big move yesterday, but it's got volumes. And you got Aether, which is down about 2.5% on the downside. MTAR Tech is down about 3%, had a big move yesterday. Thermax is down, Office is down 6%. And so it goes on the downside as well. So it's a good-looking screen overall. 100+ points on the Nifty is what you have. Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment. Rana, good to have you with us here. Thanks very much. I just want to start by asking you, this new listing today, Grow. I mean, I think it's a business which most people understand because most of our audiences would use some form of broking, if not Grow. So they're familiar with how the business works. And of course, I mean, capital markets as a theme is also has been on everyone's list as a secular kind of theme for many years. How would you think about a business like this, Rana, in terms of the valuations you would ask that you would give? So at the price that it came to the market cap it was asking for on F5 27 basis, I think Grow comes to you at about 25-26 times earnings.
Sure. Thanks for having me. The way we look at the digital businesses, particularly the ones which has a very large TAM, like financial services, and if the company is vertically integrated on the back end and can offer a plethora of financial services, not just broking, they stand the opportunity to gain from cross-selling to the customers different kind of financial services, wealth management and commodity trading and whatnot, at a very low customer acquisition costs. So if one were to take a slightly longer term view, like 2 to 3 year view on these companies, I think their profits growth going to be quite strong, and their valuations will perhaps be a little premium to the traditional, let's say, offline brokers, and to also the premium to the brokers that are online and offline. Just a data point, we look at the largest listed online broker at the moment and look at the one that is listing today. Their top line is broadly the same, but the bottom line, there's a huge difference. I think that is the power of platform that one has to recognize.
Yeah, and we'll see how Grow does in its listed market journey, and we'll have the rates in just a bit from now. Rana, good to have you join in. What have you made of the Q2 earnings season? I mean, we started the year with expectations of at least 12-13% earnings growth. At the end of Q2, you think we're on track with those assumptions?
So we started the Q2 earning, as far as we are concerned, we started with about 10% earning growth for the year. And looks like, if I now factor in Q2, looks like pretty much we're on the track to deliver 10%. Having said that, I have to say that the earnings surprises has come from some of the financials, where the earnings were very good. Auto results were expected to be strong, but they have become even stronger. And from our side, what we feel is that domestic infrastructure companies, and by infrastructure we define something like telecom, hospitals, hospitals, and all those things, they have also come quite good for us. So I think for the full year, we are quite confident that 10% will be delivered. The attention of shifts to FY27 and 28, where the projections is about 15%, whether that comes through or not. If in case it comes and our conviction on that is high, and we can talk about it why, then it will point inflection in earnings. If you zoom out and if you see FY25 and FY26, earning growth declined from 15-17% to more like 8-10%. Then if these earning estimates were to come through, it will inflect back to again from 8-10% to 15% in 27 and 28, which is something we are quite hopeful about.
Hi, Rana. Good to see you. Ben, I wanted to ask you about the space, the quick commerce space. There was a lot of enthusiasm and these stocks did very, very well. Now, silently, these companies have gone ahead and they've given actually quite a large correction. If you look at Eternal, it's closer to 300 rather than 370 that we saw earlier, this month. Even Swiggy is way off the peaks that we have seen. Any view on this theme? They're getting money. When they go to raise money, they're getting money. Swiggy, for example, they're going to be raising 8-10,000 crores or thereabouts, in spite of having good amount of cash. What is your view? The runway seems to be big. There's a fear that intense competition comes in there. And when will profitability come? Your take.
Sure. First of all, let me just unequivocally say that we like the digital space.
Okay.
Because the digital space this kind of connects the large customers with a good backend supply. But because the company is digital, that is not a guarantee to success. After you establish that, after we establish that we like digital companies, there are many key result areas that we need to monitor. For example, for quick commerce, the store productivity, the profitability of the older stores, the order value, how the company is pushing technology to the edge to tick those matrices up. On that count, the largest quick commerce company rates actually quite well. And this kind of fear that comes to the market that just because someone is putting $1 billion, they will be able to compete with their profits. I think they may have some merit, and that can affect 1 to 2 quarters. But for medium to longer term investors like us, it's we would like to see this as an opportunity.
By the way, we should tell our viewers that Tata Motors' CV business is going to be listing as a separate entity. Demerger is complete, and now when you have the option of playing the PV side or the CV side in different entities. And on that, Rana, where are you? Let's talk autos with the specific focus on CVs first. Over the last at least couple of months, numbers have started looking a little better. In fact, I think we're expecting Ashok Leyland to come out with a very good set of numbers again for the second quarter. So how do you look at a large entity like Tata Motors? And I mean, without getting into it's not a buy or sell question, but generally this demerged structure, would it perhaps offer more choice and unlock more value?
Again, we would not be able to talk on stock specific, but in this case, the merger that has happened, the passenger vehicle business still carries JLR, the Range Rover and all these things. I think for us sitting here in Singapore or for people sitting in India, it's very difficult to understand how a luxury car platform is going to perform, especially directionally when they were at a lower utilization, one could have taken the direction call, but now that offer at near utilization, incremental margins, at least we find it very difficult to call. So that being said, I think on the auto side, the commercial vehicle side was the other question. Commercial vehicle will typically depend on the industrial activity and the capex that we see. I think capex will continue, but we are not seeing that incremental delta will come through capex. So perhaps CV sales have bottomed out and they will, grow at a pretty, let's say a higher single digit phase. But that's, I think, not very exciting as far as we are concerned. In the auto space, what we continue to like is the utility vehicle space, because the premium consumption, I think, was strong already, and with this tax cuts that has come in, I think it gets another boost. Although I understand that small cars and entry-level two-wheelers have done well for September and probably continue till December, our medium to longer-term view is the segments that were doing well, which are like bigger bikes and utility vehicles, will continue to remain stronger for longer. So that's the space that we like in the auto.
We leave it there. Thank you very much for joining us with that perspective. Always helpful, Rana, and good speaking with you. It's a busy morning both at the BSE and the NSE, and maybe we could just quickly show some visuals. So as Surabhi said, at the BSE, there is the Tata commercial vehicles business, which is going to be listed. We understand that the Tata Group chairman, N. Chandrasekaran, is going to be there as well. And
that's the Grow management.
Yeah, on the NSE, on the other side of the screen, you've got the Grow management, and we will, we will try and maybe we could just quickly listen in for 30 seconds and see what's happening at the NSE with Grow. Let's listen in.
Achieving its rightful place in the world of very fast-changing technologies. As we ring this bell today, we do it with pride, humility, and optimism. Proud of what Grow has achieved, humbled by the trust we have earned, and optimistic about the opportunities ahead. Thank you all once again for joining us on this special day and sharing with us your joy. And now it's my pleasure to invite our co-founder and CEO Lalit to share more about Grow's journey so far, vision and road ahead. Thank you.
Gaurang Shah, chairman of Grow. Let's just stay with visuals. I think I think people would like to hear from Mr. Keshre, and we'll have him come up. Lalit Keshre, of course, has been the face of Grow, and we should sort of cut across to it for maybe just 30 seconds or so, right? I mean, it's a capital market play. There you go. Let's just listen in.
I came to Mumbai in year 1999 with my grandfather. And this was the place where I came to know about, that somebody can invest in stocks. Like you can own a piece of the company. I was super fascinated by how you can own a piece of a company. And that's how the journey started. I opened my account. Of course, it was very complicated, very tough. It took me a lot of time to convince the bank manager to kind of open the account. But today, here we are in 2016 when Harsh, Neeraj and Ishan and I started discussing. Our idea was very simple. Can we make this process, can we make this process simple, transparent and delightful for customers? Can we make it on a mobile phone? And if we were also very sure that if people know that they can build wealth, they can grow their life and everything by by being aware about just simple thing that you can own a stock. This was like the realization. The second story is about the confidence of the new India. As part of our customer engagement, all of us visit across the countries, smaller cities across the countries. And then I was at one of those events, we call them Ab India Karega Invest. And I saw a father-daughter duo sitting in the audience. And the daughter, very young, almost half the age of the entire kind of room. And she was asking so sharp and so confident questions. And I got a chance to meet them after our kind of event. And I could see the sharpness in her and the confidence. But what was more important, what was more amazing was how her dad was.
Well, I think we will continue to hear out Lalit Keshre and other co-founders at Grow. So it's an incredible story. It started in 2016.
Yeah.
And 60,000 crores, I think, was the asking market cap valuation. I mean, that's how in this new age you can scale so rapidly, right?
And it all happened around COVID. I mean, 2019, the story really started picking up, 20 onwards. And I mean, they came as outsiders, challenged, disrupted a business that was being run by very well-entrenched, very well-established names. So that's the Grow story, and we'll have more on it in just a bit as well. And of course, more on the Tata Motors CV listing as well in a bit. But for the time being, let's turn our attention back to the UBS India Summit. And we have more voices now joining in. Sunil Tirumalai, Global Emerging Market Strategist at UBS, is with us. Sunil, great to have you on. Thanks so much for joining in. Interesting times, right? The summit is happening at a time where so many companies continue to list in India. They keep getting the money as well, at a time when a debate rages on the secondary market that, it's not attractive enough and not enough tech opportunities, so on and so forth. Let's start right there, because I think in your latest note, you are continuing to be underweight on India, and you prefer China and some of the other regional markets as well. So just juxtapose, to us, what is the reason behind your call, and how do you contrast the secondary market underperformance versus this absolutely exuberant primary market?
Thank you, and good morning to all your viewers as well. Yes, it's a very interesting time. So particularly for the India context, after a year of deep underperformance, the things which are changing are corporates, giving you any positive signals. That's something that we are really keen to understand over the next couple of days. I think coming to your question on our positioning and in our underweight position on India, there are a few reasons behind it, right? If we actually look at the last 3-4 years of actual fundamental performance that we see delivered by companies in India, the listed companies, the large companies in the index, you actually don't see any extraordinary growth or either on top line or on earnings. It's pretty much in line, if not a tad lighter than the rest of emerging markets. The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China too. And I think it also starts with the fact that the nominal GDP growth has actually come off significantly. And that matters a lot more for stocks, for top lines, for earnings, etc. Till let's say pre-COVID, or even till 2 or 3 years ago, India's nominal GDP growth was head and shoulders above other emerging market peers. But now it's not. There are other markets which are very within touching distance, right? So while that could stabilize and there could be some improvement, we don't see a catalyst that can take it back up to 12-13%, kind of, nominal GDP growth. In the absence of that, the valuations are actually, reasonably rich. So, in our numbers, historically, India used to trade at a 35-40% premium to other emerging markets. It's now, even after a year of underperformance, it's still at a 60% plus premium, right? Now, in the context of all this, I mean, the report that you're referring to that came out this morning, actually, we've done a lot of work on the AI theme itself. It's a global effort, trying to understand where we are in the cycle, how much, more to go at a global level, and which countries, which stocks are more exposed, etc. India is conspicuously absent, on that theme, and I think that's something that, from a global investor's perspective, other markets like China, like Taiwan, like Korea, which are giving you better opportunities. Now, the specific question on, the secondary market versus the primary market, I think that's actually one of the reasons for the underperformance of the secondary market. So if you actually see, no doubt the flows of household money into the stock markets is continuing. SIP investments, the flows are fairly high. They're not going much higher anymore. I mean, they're kind of showing signs of plateau. But the other interesting change is that the capital raise activity by corporates is actually shot up significantly. I mean, when we did some numbers pre-COVID, the total on a run rate basis, about 10% of the money coming in through SIP and mutual fund flows and other direct flows into the market from households, about 10% of it was the scale of corporate demand for equity capital. Now that number is touching 25%, and combine that with the fact that foreigners are also not excited. They are finding other markets to invest, and hence money being taken out of India. That's what is preventing the secondary market to do well. So you have a decent supply of paper. I mean, all these IPOs are good. They're really good headline material, but it also means that that's money being taken away from the market.
Sunil, you're building a very believable, compelling bear case, justifying that call. So therefore, let me ask you, and we are barely, 3-4% at the index level, we're barely 3-4% away from the all-time highs. Given all the negatives that you described, the fact that MF flows have slowed down, there's no two ways about that, and FIIs have not returned, is there a possibility of some price correction in India? So far, it's largely been time correction. What do you see ahead for the broader market, for the index?
Okay. So let me take a step back. From a global perspective, we are reasonably positive on global equities, right? So, there's on S&P 500, there is a 10-11% upside till end of 2026. On our emerging markets target, it's a tad lower. So we are actually arguing for the US regaining leadership. The setup globally for equities is reasonably good. Global macro, on our economist numbers, US economy should start, revving back up and, accelerating in the back half of next year. China numbers, while they are slowing down, they've actually been upgraded from what it was a month ago for the next year. And in this context, where are valuations? And let's look at the rates market. There is an anticipation that potentially the Fed could start expanding their balance sheet. There will be stable coin demand in the US. I mean, all of that will keep yields in check. So it's a reasonably benign environment for global equities returns, right? So I think it will be really hard for a more than, let's say, more than a 5% correction, in the market. Of course, we need to be clear about a dollar correction versus a rupee correction. Our call is for the rupee to depreciate till end of next year. But keeping all of those things in mind, I think it's more likely that the time correction will continue rather than a very sharp price correction, because the supply of money from households is still continuing. That's a fantastic buffer for the market. It makes it very defensive and very protected against a big correction.
Okay, all right. Sunil, thank you very much for joining us, and good speaking with you here on CNBC TV18. I think 90 points higher on the Nifty, 25,785. Is looking super strong. 2:1 is the advances to decline ratio, 1,800 up and about 800 lower. So still looking very, very strong. And by the way, BSE is moved up 6%, by far the number one volume-led gainer on the NSE. Nigel.
All right, well, let's focus on Fortis Healthcare. They reported a good set. Double-digit growth continues with margin expansion. We have with us Mr. Ashutosh Raghuvanshi, the MD and CEO at Fortis Healthcare, who joins us on the show. Hi, sir. Good morning and good to see you. Ben, give us a few details. What's the outlook with regard to occupancies as well as the average revenue per bed? And tell us a little bit about how the case mix evolved in the past quarter.
Good morning. Glad to be here. The outlook is, as far as occupancy is concerned, we have had a good occupancy on an enhanced base of beds. We increased about 550 operational beds. On that, we had about 70% occupancy. On the organic basis, it was almost about 80%. So that trend likely to continue. However, third quarter typically is a quarter which has less occupancy because of festivals and holidays, etc. So we would probably see some dip in third quarter, but that should recover in the fourth quarter. As far as the case mix is concerned, we are continuously seeing a trend of more complex cases coming, as well as the surgical cases being higher in number. And that is what is driving the ARPOBs higher. However, if you see from the last quarter to this quarter, our ARPOB has more or less remained stable. It has not grown in the same proportion as earlier. And that's what I have been saying for some time, that these ARPOBs will get moderated. But the increase in ARPOB is exclusively a function of case mix and not a pricing change. So that's the trend which is going to continue in future as well. And we are pretty confident that the occupancy levels would remain high.
Okay, all right. Just to focus on the hospital business then, give and take everything that you said. For the year, we should be looking at what? Mid-teens growth, in the hospitals business with margin expansion of 100, 200 basis points. Gettable?
Yes, so we saw about 19% growth in this quarter in the hospital segment alone. And we expect that this trend would remain. So definitely mid-teens or high teens, I would rather say.
Okay. Fill us in with the current status with the insurance companies. The company, there was that dispute with regard to cashless payments. Has that been resolved? Where are we at with regard to that?
Yeah, so cashless issue was not with us, but it was there across the industry. And that is, for now, it is resolved. Having said that, insurance, health insurance is a very, very important component of the healthcare ecosystem. Payer is as important as provider. And we expect that, the relationship between the two would improve. So a lot of dialogue is happening, a lot of engagement is happening with the insurance. And I think there are certain reforms which need to be done. And we are moving in that direction. So one of the demands which the insurance companies have is to get onto the healthcare exchange and have a kind of a...
Can I... Right. Can I just a specific question, sir? We reported this. Good morning, Prashant here, Mr. Raghuvanshi. And of course, this is with help from, of course, government as well. After discussions, that major hospital chains have agreed not to take price increases for 2026. Can you confirm that for us? If that has happened?
I don't think there is any such proposal. At least we haven't heard of any such proposal. But as I have been saying, that the price hike in the hospital segment has only been to the tune of about 1.5% year on year. So even if this year, whatever price hikes happen, is likely to be in that range only. As far as Fortis is concerned, we haven't taken a price hike this year. But early next year, we would evaluate whether a price hike is required.
So you're saying that there is no, okay, so you're free to do what you want. You've not taken one this year. Next year it's possible. But as this gets under more and more, and there is a fair bit of angst around this, right? Both on the insurer side and hospital side, and depends on who you speak to, and you get both views. But this is the issue which is going to come up, the cost of healthcare, right? And who's paying for it is getting more and more scrutiny, and I suspect that will only increase. Mr. Raghuvanshi, what is your own sense, sir? From a hospital perspective, do you expect this to get more look in from the ministry, government, etc. as well? In that sense, making it a little more harder for hospitals. Because I'm speaking to you, of course, some things may happen on the insurer side as well. But for now, if we were to talk about hospitals, price increases to get tougher.
Yeah, Prashant, I have always maintained that price hike is not a lever which the hospitals should be using, and that is our preference not to use that lever. And as I was saying earlier, the insurance providers and the healthcare providers, both the payer and provider, are equally important parts of the healthcare ecosystem. And it's our responsibility to resolve these issues and make sure that the patient gets the best possible deal. So I think the effort is in that direction, and you are absolutely right. The government also is very proactive in this area. A lot of dialogues are happening as we speak, and we expect that these issues will be resolved not overnight, but over the next 1-2 years. You should see a lot of reforms happening in the payer-provider ecosystem.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us that insight. Wishing you all the best. And we look forward to speaking to you as the quarter progresses. For the time being, we slip into a short break. We'll speak with the management of Bharat Forge. Mr. Baba Kalyani is waiting for us on the other side. They reported a strong set of numbers.
Welcome back. Grow is settling at 112 rupees compared to an issue price of 100. Tata Motors CV, the price is settling at about 335. This is in the pre-open. The listing happens at 10 o'clock. So, interesting with both those. And we'll, of course, go across to NSE and BSE. As I said, it's a busy morning at both exchanges with these respective listings. Bharat Forge is the next business and company that we want to speak with. They reported a healthy set. Baba Kalyani is Chairman and Managing Director at Bharat Forge is with us now. Mr. Kalyani, good morning. Great to have you with us here. It's always a pleasure speaking with you. Prashant this side, sir. So the standalone business was impacted by sharp declines in North American truck production and, of course, the resulting inventory destocking. And of course, some of the other non-truck business has made up for it. And I guess that is the guidance going forward as well. But can I get a sense, some guidance from you on the truck business side, sir, for calendar 2026 from you?
The truck market in the U.S., if you look at the medium and heavy trucks, that's down by almost 45 to 50%. And it's not just the 50% drop or 45% drop, but because of that, we have to also destock. So our supply is actually at about 30%. So when this gets to normal, and I hope this will get to normal once the tariff situations get to normalcy, not only with India but with other countries, and that's probably like to happen by next quarter. So we see calendar year 26, second half, things to improve in this sector.
The OEM guidance for 26, companies like Volvo, etc., they're all forecasting some decline, right? At this point.
It is forecasting decline because they also have the problem of destocking. I mean, everybody was building at the rate of 350,000 trucks. So almost 27,000 trucks per month. And now they have come down to 14,000 trucks per month. So there is a hell of a lot of inventory, supply chain inventory, and all kinds of things. On top of that, they have to pay very high tariffs on most of their supplies. So it's a little complicated problem, I think, but looks like the problem is going to get solved, hopefully in the next few months. So we should see unwinding of this probably by second half of 26.
H2 of next year. What about the non-auto business, sir? Could you provide us, and we'll talk specific numbers there, but you think growth there continues?
Yeah, the growth there will continue because that's a strategy that we have put into place, that to grow our non-automotive business in multiple directions. And there are huge opportunities today coming up in that area. And there are high technology products. And we are good at that. That's something that kind of fits our profile. I can't say more than that because most of these products are pretty sensitive in terms of information sharing. But we see a large growth coming in the industrial products. One of the areas where we are seeing a massive growth is the high horsepower engines. Power supply, power generation, standby supply to all the data centers.
Oh, okay. Of course. Yeah, that's a budding industry. Lots of action on the data center front. Sir, got that. If I may ask you, sir, I know a lot of these businesses will build up over the coming several quarters. But if I could ask you for a ballpark understanding of how Bharat Forge consolidated will look like, say, by the end of next year, end of FY27, in terms of total revenue, how much is going to be automotive, within that, how much India, how much overseas, and how much will come from these newer businesses, whether it's defense and there is aerospace, and now like you're talking about data centers, which is, industrials X of auto.
Yeah, I can't tell you exact numbers. All I can tell you is that, there are certain events that need to take place before we start seeing growth. One is the trade deal that needs to happen. And second is, in the U.S., the industrial and commercial vehicle production has to get back to normal. I'm not even saying it needs to increase. Just needs to get back to normal. These are, I think, two conditions that need to happen. As far as Bharat Forge is concerned, we have kind of taken a lot of steps to isolate us from that, and that's why even in the quarter that just went by, our consolidated data looked much better than this. We have one sector that is growing at a very fast pace, and that is our aerospace sector. We see our aerospace sector going at almost 25-30% annually for the next couple of years. So that's a very good thing for us because we have worked hard on it for the last few years. We have invested in it, and now we are beginning to see the results. And it's a very profitable sector.
All right. Hi, Mr. Kalyani. Good morning and good to see you, Ben. So let's touch upon a little bit about the aerospace business. As you said, you're expecting a big growth. I think at the end of this year, you're expecting it to be a 350 crore business in terms of revenues. Say in the next 2-3 years, how big can this business become? And also in the defense business, you have done a fantastic job. The order book is at around 10,000 crores. However, execution has been a little bit slow in the first half of the year. I think you're expecting the second half of the year to be much better. So what is the revenue trajectory on the defense business that last year did around 1,700 crores? How do you see this business scaling up for this year and post that?
This business execution hasn't been poor. It's just the process that is laid down by the Defense Ministry and the Armed Forces. which just takes a long time. I mean, there's something called FOPM and all kinds of things involved. So once that process is finished, from our side, execution will be extremely fast. Like you saw when we got the order from Armenia for artillery guns, we finished the order 1 year in advance. So execution is not the problem. I think the process is a little complicated process, but I think hopefully by next quarter, that process will get over and then we will start delivering guns to the Indian Army.
So by the end of this year, defense will look like what kind of revenues? I think earlier we were guiding for close to 2,000 crores of revenues. Will that be possible? Second half of the year can make up so much?
No. It will be similar to what we have today.
Okay.
Okay. Maybe some small increases because we are now getting, we just got an order for underwater systems, which we have to deliver. But all that it has to be delivered in the next 12 months.
Okay, let's take a longer term view then, sir. In the next 2 years, what is the revenue outlook for the defense business where you're sitting on a super order book and on the aerospace business, which is growing at a very fast pace?
A lot of growth 2 years from now in the defense because it's not just one vertical of artillery guns or something like that, or we have a large order on small arms, but we have created 3 or 4 new verticals in unmanned systems, underwater systems. We now got an order for an underwater system that goes down to a depth of 1,000 meters. That's a technology which hardly anybody has in this country.
Yeah.
And similarly, we are targeting some unmanned systems in the drone, sophisticated drone area, kamikaze drones and others. We will know about it in the next few weeks. But there's a lot of work going on in our company on that.
A lot more questions, Mr. Kalyani. Just one last. In aerospace, do you supply directly to the 2 players, or you supply? You supply to supplies in turn supply to the 2 Airbus and Boeing?
No. We have 2 sectors in aerospace.
Defense and
jet engine manufacturers. So we supply to Rolls-Royce. We supply to Pratt & Whitney.
Okay.
And we supply to Honeywell. These are 3. The only jet engine manufacturer we have not yet got orders from is Safran.
Okay.
All the engine manufacturers, we supply them rotating components, turbine blades, active components that are in the engine and the turbine.
Okay. Very quickly.
Titanium, high temperature alloys and all that. So pretty high technology.
All right.
We supply structural components to Boeing. Structural components to Airbus through one of their tier 1 suppliers called Liebherr, where we supply landing gear components. To Boeing, we supply large components which connect the engine to the wings, a large titanium forging. So there's a variety of products that we do, and that business is just growing.
Very quickly, sir, some inorganic growth is planned. Have you got a fixed target? Because you're raising some money, I think 2,000 crores for both organic and inorganic. But should we expect some kind of inorganic growth?
Our overall strategy is to pivot our business to the India-centric business because we believe that India is going to be the largest growing market for the next 15, 20 years. If you look at Honorable Prime Minister's Viksit Bharat program, whatever the numbers come out, whether it's 25 trillion, 30 trillion, whatever it is, the growth in India is just going to be fantastic.
Okay.
And focusing largely creating a focus and tilt towards Indian growth. And that's where some of the M&As, inorganic activities will happen.
Okay. All right. Sir, thank you very much for giving us perspective on all of your businesses. And we wish you good luck with the second half. In the next couple of seconds, Grow will start its journey in the public listed markets. The prices settled at around 112 in the pre-listing session, which is actually a little better than the so-called great market premium. And I think we have the entire top team there ringing the bell.
Some kiddos as well.
Look at the little babies. They love it. They love it. This.
117 rupees now, 70,000 plus crore in terms of market capitalization. So that is the picture at this point in time. I mean, 118 rupees, and it's a good listing. 112 was the listing price, and it's moved up from there. Tata Motors commercial vehicle business listing at 335 rupees per share. at this stage. So grow is, I think, 20% now.
Yeah.
And a lot of demand, a lot of interest. It's a business which people understand and many, of course, use it as well. 30% higher on the Tata Motors CV business at this point.
I think if you just get those visuals back up, something Surbhi was talking about earlier, diametrically opposite, in terms of those visuals that are coming in.
Two different companies, two different businesses, right? You have
two different businesses, the suit and boot.
The suits and ties on the left, and then, the usual jackets or the jumpsuits maybe on the right. One, a new age entity, a disruptor, completely redefined the way broking and especially discount broking, how it took off in the country, becoming the biggest broking entity with the largest number of active clients on the NSE. And of course, on the left, Tata Motors in its new avatar, now with both the businesses separate, PV and CV, looking to inspire more confidence. But yeah, Nigel, absolutely. That's what I was noticing earlier as well, right? You have the suit and ties on one side, and then you have the new disruptors on the other.
Well, and the babies always steal my heart. Beautiful visuals coming in there. I think the little champion got too close to the bell when it went off, and then he was all surprised. But that's about that. We take a break, I think, sir. Come back, and we'll be joined by the management of RITES. Stay tuned. Welcome back. Let's get straight to RITES. They report a good set of numbers in the second quarter. In fact, the management is confident of surpassing their FY25 revenue growth going forward as well. We're joined by Mr. Rahul Mittal, the Chairman and Managing Director of the company. Hi, sir. Good morning. Thanks a lot for speaking to us here on CNBC-TV18. Fill us in with the basic numbers. What kind of a revenue growth are you looking at? Last you were talking about, surpassing FY25 numbers. So on that sort of a base, what kind of growth? One, EBITDA margins as well as profitability margins.
Good morning. Yes, when we spoke last, we had said that our aim is to sequentially keep on improving and surpass the last year's figures, both in top and bottom line. And as you see the Q2 results, we are moving in that direction. There's been about a 12% growth sequentially. YOY, in any case, there has been a substantial growth in the bottom line. And also the margins we've been able to not only secure them, but substantially above the range that we had set. So we are moving in the right direction and we are satisfied. We're quite happy, in fact, with this quarter in the sense that whatever roadmap we had set at the beginning of the FY, we are moving in line with that. So EBITDA margins of above 20%, PAT margins of above 15% minimum, and definitely a growth in the top and bottom line vis-a-vis last year.
Mr. Mittal, your order book is now closing in on the 10,000 crore rupee mark, right? So just tell us how the split is between turnkey and the other segments, and also which segment is going to be driving growth. How it's shaping up, and particularly your big India business on the domestic consultancy side. What is happening out there?
Yes, so the order book has been substantially growing. We've crossed the 9,000 crore in this quarter. We added 150 plus orders totaling to about 850 crores plus. So a net addition of about 300 crores in this quarter. And the turnkey segment is 4,300 crores. The consultancy is about 2930 crores. The export of rolling stock is about 1540 crores and the balance is about 300 odd crores. So if you see the key drivers in terms of top line, the top line will be driven by the execution of the turnkey projects, but definitely the margins in turnkey are very low. The bottom line and the margins will be driven by my consultancy and the export of rolling stock. And that is what, if you see, has contributed to the Q2 performance also. It's primarily because of the contribution by the consultancy and the export of rolling stock segment.
So your EBITDA margin moved up to, I think, about almost 23.5% in Q2. Are these sustainable margin levels? Because I think your guidance for the full year is around 20%, but because Q2 has been so strong, how is the mix going to be? And then could the overall full year margin be better than 20%?
So you see Q2, because the contribution from the turnkey segment was very low. If you see there's a 90 crore dip vis-a-vis YOY. And that's primarily because in the turnkey segment, more than 2/3 of my order book is less than about a year old. It's about 8 to 10 months old. And the actual execution and the revenue booking will start in Q3, Q4. So definitely the blended margins will, kind of contract and be in the range of about 21 odd percent. This quarter, the contribution was majorly from the export and the consultancy wing. About 90 crores of the dip in turnkey was offset by 90 crores by the consultancy and export segment. So that's why the margin, if you see in this quarter, has been slightly higher. But to my mind, on an annual basis, we'll settle in the range of about 20-21% EBITDA margins.
20 to 21%. Is there an increase in competitive bidding in domestically? And also just give us some color on exports. Obviously, is a very small part of your business right now, but you are looking to grow it. So just leave us with some, maybe some aspirational targets and what you're thinking in terms of exports going forward.
So you see, we had set ourselves a target of getting one export order a quarter last year. We started this about 7 quarters back, and we've maintained that steadily. Even in this quarter, we got an order for 160 crores for export of rolling stock. And now our export order book stands at 1540 crores. And this is the first quarter that the delivery started. So you see, after a long gap of nearly about 5 to 6 quarters, you see a booking of about 60 crores on the export of rolling stock. And this is the segment which is going to drive in the coming quarters. We are confident that we will continue to maintain a trend of getting at least one export order a quarter and parallelly delivery on the existing order book.
Okay. All right. We'll leave it on that note. Thank you very much for joining in and giving us some perspective on the numbers. Thanks for being there. Well, we'll take a quick break. On the other side, our special segment, It's the Economy. Today, Lata is in conversation with Santanu Chakrabarti of BNP Paribas on his stock picks after the BFSI Q2 result period.